Hey guys, my name is Andrew and welcome to my channel. So in this video I'm going to talk about trading tactics regarding price action. Previously I talked about support and resistance and candlestick patterns and all stuff like that. But guys, you know that there is much more into it when it comes to day trading, okay? So in this video we are actually going to take a look at the closer picture of whether to enter the trade or not, and which are the levels for stop loss and take profit. Well, you know that day trading is not just about the support line and resistance line and a couple of candlestick patterns. No guys, there is a lot more into it, because we don't want to place the trade where all the other people are placing the trades. These price levels. We don't really want to place our trades at support or resistance levels, because those are the levels other people are placing their trades as well. That's why we need to look into bigger, more professional picture of how to place the trades in most professional manner possible. So guys, let's get started. Before I start, guys, make sure that you click on that subscribe button, and you can also click on like button. And if you didn't see my previous video, please watch my previous video from my channel where I showed you how we made over 8,000 euro in 5 days from one single index trade. We were trading Nasdaq 100 and we made over 8,000 euro from one single trade. So I have made previous video and explained you what take profit level is and what stop loss levels are as well. So TP and SL levels. But in this video, guys, let's take a look at a closer picture of those support and resistance lines, and which are the best trading, which are the best entry levels, and exit levels. So if you were reading books or watching other trading, tutorial videos from other channels, then you know that of course the support and the resistance lines are one of the most, it's really important factor, okay? But when you place your trades only according to support resistance lines, you often will lose your money and you often will be in losing positions. So how to avoid that? So I have two bullet points which at the moment will not make sense to you if you will not watch my video until the end. So so first thing is about the stop loss, okay? So it's really important that you don't place the stop loss where all the other traders are placing as well. You need to give a bigger distance. So what I basically mean by that? So for example, if I was trading by the book, it's always best that you do not trade by the book, that you trade by using your patterns. Because as you know, I am pattern trader. I trade according to the patterns and according to the market conditions happening right here, right now. So what I mean by that, just let's take a look at this what is this GBP JPY? Okay, let me choose the 1 hour for a little more detailed picture. So if let's first of all identify support and resistance. So for example, okay, so here is a really strong support. I hope you agree with me, this level right here. So if we were trading by the book, okay, so the price went up here, it bounced back from here, then we know that this is our really strong, this is our strong support. So we know that, so we know that if the price is gonna hit if the price is gonna hit this level right here, it's gonna go back, it's gonna go back up from that point. So this level, if the price goes, so if for example if the price is here, it goes back up here, then we already know that this is our strong support. We know that if the price will go back to this point, it's gonna be great buy position or call trade for GBP JPY, this asset. And because the price then goes up, because this is our strong support. So where is our stop loss? So this would be our entry price would be here at 140,801. Our take profit would be our next resistance, which is around this area, 142, okay? But where is our stop loss? So our stop loss would be obviously below our entry price. So if this would be a buy, so this would be a buy position, which means that we only make profit if the price goes up. If the price goes down, we make loss. For that, we don't want to lose we don't want to lose a lot of money for one trade, which means we place stop loss. and we would place stop loss below our support, which would be around this area, okay, around this area. But what is the problem? Okay, take a look. So our stop loss should be next possible support. As we can see right here, you know that this would be our next support right here. Okay, this little spike. But look what happened. The price, you know, this spike right here, guys. Okay. This is our next. This is our small support corridor. So this will be our stop loss, because by the book, you know, trading books, forex trading books always says, you know, if you make a buy order for a particular asset, your stop loss should be below your support, which is obvious. So, but this is my area below my support. But there is a problem, okay? If you see the price hit my, you know, stop. The price actually touched the support and went a little bit even lower than that. It went up to this point. It went as low as this one. Price went as low as 146.22. Okay, 146.22. So it went and it hit my stop loss. But you know what? What happened then? The price actually, you know, it was only a spike. And then the price went back up. Meaning that I would lose my money even though the price went the correct direction. Please pay attention, guys, because this is one of the reasons why people are losing money, even though people are identifying support and resistance lines correctly, placing their trades correctly, but still losing money. Why? Because people are not paying attention to the stop loss. So what you should do with your stop loss, so that you will not get, you know, your stop loss hit by a few pips and then the price goes up, which is, you know, which makes it really, you know, a hard feeling. What you should do is, you know, give your stop loss bigger distance. Think outside the box, okay? So all you need to do is just give your stop loss bigger distance. Give your stop loss more room. So put your stop loss lower or higher depending on your buy order. So to place this trade in more professional manner, what I would do, I would put my stop loss not here, which will result me into losing this trade. I would put my stop loss here. You know, never take into consideration all the spikes, okay? Spikes. Take into consideration only the candlesticks for the previous support. And which are the candlesticks for my previous support? I'm gonna draw it now. It's here, guys. Around, so it's 145.60. This should be my stop loss. And as you can see here, if you place your stop loss according to, not according to the book, if you think outside the box, you think outside the book, you know, you put your trade in a more professional manner by looking for next possible support, you take into consideration your candlesticks, then this would be my stop loss. And what would happen in here? I would not lose my money, because as you can see, my stop loss level was not hit, which means that the price went as close as here and then it, you know, went back up here. So this is my entry price around here. Here is my loss, so I would make loss around here. So this is my little loss. So these are the pips I would make loss. So 140.750 to 140.650. This is my losing money. But after that point, the price goes up and I make profit. Why I make profit? Because I adjusted my stop loss and I gave my stop loss bigger distance. That's all there is for this particular point. But that's not only it, guys, okay? Now, when we have identified that, okay, this would be my stop loss, meaning that I give my stop loss bigger room, let's go to the next point. You know, set your stop loss at developed consolidation area only. What does it mean? This basically means that you will only place the stop loss at your, you know, when the candlesticks are building up. I'm really sorry, because Gary is just going crazy right here, my chameleon. I'm just gonna put him back on the tree here. So I really hope that this first point makes sense. So for example, if the price goes up and down like here, then now I draw my support and resistance lines, okay? So and the price goes back up here like this, for example, okay? So this would be my entry point for a buy trade, okay? And my stop loss would be in this area. So, but what my advice would be, okay? My advice would be to make your stop loss, you know, below that. Just give it more room. But always remember that don't give your stop loss too big room. For example, if I was trading here, okay, let me just see. So here is our support line right here, and if I was going to place, yeah, so if I was going to place, for example, a put trade in here, okay, if I was going to place put, so in this area, I would make a sell trade, because this is my very, very strong resistance line right here, and the price went down, boom, and it respected it here very, very huge. It respected this area a lot, and this is 1 hour chart, so this is really strong resistance. And I place my sell trade in this area, but make sure that you do not give you. So my stop loss should be around here, you know, and my stop loss should be around next resistance is around this area, okay? It's around here. But don't put your stop loss too big room, you know. Some of the inexperienced traders may put stop loss too high, which would be here, okay? So if you take a look at this, okay, this would be too, okay, this is this area is extremely strong resistance, yes, but we have another resistance here, so make sure that you don't give your stop loss too big room, otherwise, because you know you may lose too much money, and this will not make sense in terms of risk management. You know, your reward regarding this risk trade, you know, regarding this stop loss risk is not worth it, okay, because the stop loss level is way too far away, you know, which will cause you losing a lot of money for one single trade. So please do not do that. Okay, now let's go back to my second point, which is regarding the stop loss and your developed consolidation areas only. So these are the build-up areas, okay? So I'm gonna show you what I mean by this. So set your stop loss at build-up areas only, or consolidation areas. So let's take a look at different charts. So what is this? EuroCAD. So EuroCAD. So again, let's take a look at. So as you can see, so from here. So from here to here, we can see that the price is experiencing downward movement, downward trend, and there are pullbacks right here, and here, and here, and here. So as you can see right here, so some of the inexperienced traders would simply identify their support and resistance. So I'm gonna do it right now, and I'm gonna show you the biggest one, really big mistakes people are doing. So this one, yeah. So this would be one of our resistance right here, and here. These are bad resistances, you know, bad resistance regarding the risk factor. So yeah, and then we have another one here, and let's put another one here. Yeah. So we have a four lines, okay, right now. So what I mean by the consolidation areas. So for example, you can see here that the price went down here, price went here, it respected the resistance here, it went here, and you know, this was a support here, it became resistance here, it was a resistance here, and resistance here again, and then we also have a support here. So whenever support is broken, it becomes our resistance. Whenever resistance is broken, it becomes our support. But look at this. People are making huge losses, you know, by identifying these resistance and support levels. So resistance levels, for example, here, here, and here, and here. Which are the best resistance levels? One of the worst resistance levels are, guys, here, here, and here. Look at these gaps. You know, look at these gaps. You know, look at these strong gaps going on in here. Okay, the price goes here, bounces back down. The price goes here, bounces back down. What we as professional traders are looking for? We are looking for, you know, we are looking for consolidation to happen which happened in this area. You see? Okay, so the price went down from here to here, like boom, you know. So the price just went down. These areas are very risky areas. This, and this. Okay, we identified, you know, that this is our support resistance. Let's take a look at it. Okay. Let's take a look at it here, for example. I just want to touch this one. Yeah, so this was already really strong, great resistance, because it was resistance here, and the same level has been respected. But the price is not consolidated. The price has not shown that build up area, you know, like here. So what we really want to do, we don't want to trade when we see this strong price drop, or strong price, you know, moving up. We really want to see that the price goes here, stops like here, and starts to consolidate, you know, and starts to be stable and stabilize itself. So as you can see, the price stabilized itself right here. And so basically this is the area when we would want to look for trading opportunities, you know, especially if we go back and we look at what was our biggest low and biggest high. So we considered this area as our biggest low, okay? Because we don't look that much back. So this is our biggest low, this is our biggest high. And if we didn't see this area, we see, you know, let's just go back here and let's pretend we didn't see that. We didn't see that future. Let's pretend. So this area is really highly risk. So because this resistance and this resistance, we will not be able to structure these resistances, because as you can see, there are a lot of spikes. There's one spike here, which will obviously be one of our stop losses, and the same happens in here. You see, the price goes down, shoots back up. Price goes down, shoots back up, and these shoot ups are our stop loss areas, which will mean that we're gonna lose money even though we placed the money the correct way. So imagine if we placed the sell trade here and we put our stop loss at this level, what's gonna happen? We made this. We made the loss, because the price showed up here and it hit our stop loss. So this is our sell price. This is my stop loss. My stop loss is hit, I lose the price. So what do I need to do is, I really want to avoid trading when we see these pullbacks. So price goes down, shoots back up, down, shoots back up, down, shoots back up. I don't want to trade in these areas. I want to see when the price really consolidates, starts, you know, showing this consolidation area in this, from this to this point, from this point to this point. So this area right here, okay. Sorry. So let's see this area. So this area, when the price has finally consolidated, and what happens? I seen my newbie traders making these mistakes. So people are basically identifying support, resistance. So this resistance and this resistance, and then placing the sell position here and stop loss here. They lose money. Again, they identify resistance, they make sell trade here, make the stop loss here, and they lose money. Why? Because they traded blindly. They traded, you know, not into consolidation area. They traded, according to the support resistance lines. So people who trade by the book only tend to lose money in long term. That's why really pay attention, guys, to the price action itself, okay? And pay attention to what price is doing. So my advice would be to look for these price consolidation areas and only trade in these areas. So yeah, let me go back here. Let's go back here and see what happened. So again, here we can see the same freaking story. If we didn't see that, the price. So this is my high, this is my low, and the price goes back here, bounce back up, here, bounce back up, and look. So again, the same story, guys. Look, so the people will identify a resistance level here, So they see that this is the resistance level. They will make from here. They will make sell trade at 1.53018, stop loss at higher, a stop loss at this level 1.53135, and they place sell trade. The price did go down, and they placed sell trade, and the price did go down, but they still made loss because of this shoot up, and because the stop loss was hit, and the money is lost for that trade, but the trade still goes down because people are trading, during these pullbacks. So please, guys, trade when you find these consolidation areas only. So so don't trade here. Don't trade here. Trade here. Trade here. Trade here. Look, trade when the price is consolidated and price is more stable. Look for those indications. Look for those positions, So these are the areas where you should, place your trades, for best results. So I hope, guys, you enjoyed this video. And don't worry, guys, I'm gonna make more videos about this matter. Please email me if you have any questions, any issues. Please email me at incomementorbox@gmail.com. You're welcome to join my trading academy and copy my live trades from our trading group. But please, guys, before you place any trade, make sure that you, understand your stop loss and take profit levels accordingly. So I hope, guys, you enjoyed this video, and see you guys again next time. Bye!